Well, good morning, Jayendra Rana here. The topic of the day is revised set of insurance regulations. Revised set of insurance regulations. Insurance Regulatory and Development Authority of India has notified a host of regulations including on surrender charges, wherein insurers have to disclose such charges upfront. So IRDAI Insurance Product Regulation 2024 merged 6 regulations into a unified framework aimed at enabling insurers to swiftly respond to evolving market demands, enhancing the ease of conducting business, and boosting insurance penetration. These regulations promote good governance in product design and pricing, including strengthening the principles governing guaranteed surrender value and special surrender value along with disclosures thereof. It also ensures that the insurers adopt sound management practices for effective oversight and due diligence. These regulations have already come into force from April 1st, 2024 for policies that have been surrendered from the 4th to the 7th year. The surrender value may see a minor increase. So the Insurance Regulatory and Development Authority of India, at its meeting held on March 19, approved 8 principle-based consolidated regulations following the comprehensive review of the regulatory framework for the insurance sector. These regulations encompass pivotal domains such as safeguarding policyholders' interests, rural and social sector responsibilities, electronic insurance marketplace, insurance products and operations of foreign reinsurance branches, as well as aspects of registration, actuarial, finance, investment, and corporate governance. This comes after the notification of the first consolidated regulations on expenses of management of insurers in January 2024. It marks a significant milestone in regulatory governance which has replaced 34 regulations with 6 regulations and introduction of 2 new regulations, enhancing clarity and coherence in the regulatory landscape. So the process involved extensive consultation with diverse stakeholders, including insurance industry experts and public at large, ensuring a comprehensive consideration of varied perspectives in shaping the revised framework. The RDA Rural Social Sector and Motor Third-Party Obligations Regulations 2024 consolidate 2 erstwhile regulations pertaining to minimum business obligations in rural, social sector, and motor third-party business for insurers as amended under the Insurance Act 1938. So compliance and measurement of these statutory obligations have been revised, where the unit of measurement under the rural obligations will now be Gram Panchayat. The scope of social sector has been extended to cover card holders and beneficiaries under various schemes. Under the motor third-party obligations, the unit of measurement will be the renewal of insurance coverage of goods carrying vehicles, passenger carrying vehicles, and tractors. So besides the IRDA registration and operation of foreign reinsurance branches and Lloyds in India Regulations 2024 consolidate two regulations and aims to foster the systematic development of the reinsurance sector in India by promoting orderly growth and harmonizing the existing legal and regulatory framework. So these regulations seek to streamline the operations of entities engaged in reinsurance operations. By promoting transparency and stability, these regulations aim to create a conducive environment for the growth and expansion of the reinsurance sector, ultimately benefiting both insurers and policyholders in India. At the same time, the IRDAI, Protection of Policyholders' Interest and Allied Matters of Insurers, Regulations 2024 consolidate 8 regulations into a unified structure, focusing on several key objectives aimed at ensuring fair treatment of prospects during solicitation and sale of insurance policies, and protecting the interest of policyholders throughout their engagement with insurers and distribution channels. So these regulations emphasize the adoption of standard procedures and best practices by insurers and distribution channels to fulfill their obligations towards policyholders, including grievance redressal and policyholder-centric governance. Additionally, the regulations aim to promote prudent practices in risk management related to outsourcing activities by insurers. The regulations ensure that the opening or closing of places of business by insurers, both domestically and internationally, is conducted in a manner that prioritizes the interest of policyholders. So, in a significant regulatory revamp, RDAI has replaced 34 existing regulations with 6 regulations and introduced 2 new regulations. On March 19, the IRDAI board approved the 8 principle-based consolidated regulations to enhance clarity and coherence in the regulatory landscape. The regulations encompasses pivotal domains such as safeguarding of policyholders' interests, rural and social sector responsibilities, electronic insurance marketplace, that is Bima Sugam, insurance products and operations of foreign reinsurers branches, as well as aspects of registration, actuarial, finance, investment, and corporate governance. So, for the first time, the governance aspect under the existing guidelines have been notified in the form of regulations. This highlights the importance of governance in the functioning of an insurance company. Also, the IRDAI has now de-tariffed or de-notified the policy wordings, which means general insurers are at liberty to come out with new wordings suitable to the customers and requirement of the market. As regards rural, social sector and motor third-party obligations, the erstwhile regulations pertaining to minimum business obligations have been consolidated. The compliance and measurement of these statutory obligations have been revised, where the unit of measurement under the rural obligations will now be Gram Panchayat. So the scope of the social sector has been extended to cover cardholders and beneficiaries under various schemes. Under the motor third-party obligations, unit of measurement will be a renewal of insurance coverage to goods carrying vehicles, passenger carrying vehicles, and tractors. The most talked about regulations were related to Bima Sugam and the ones on product regulations, primarily changes in surrender value norms. The granular changes made to the surrender value regulations are, however, yet to be disclosed, but now it has come into force already. So, the IRDAI Corporate Governance for Insurance Regulations 2024 aims to establish a robust governance framework for insurers, defining the roles and responsibilities of the board and management, This is for the first time that the governance aspect under the existing guidelines are notified in the form of regulations, which highlights the importance of governance in the functioning of an insurance company. It also prioritizes meeting the expectations of all stakeholders, especially policyholders, while ensuring the adoption of sound and prudent governance principles and practices. By emphasizing transparency, accountability, and ethical conduct, these regulations aim to enhance trust and confidence among stakeholders. The RDI registration, capital structure transfer and shares and amalgamation insurers regulation 2024 has streamlined 7 regulations into a single comprehensive framework. It aims to foster the growth of the insurance sector by simplifying various processes, including registration of insurers, transfer of shareholdings, capital structures, amalgamations of insurers, and listing of shares on stock exchange. By streamlining these procedures, the regulation seeks to enhance the ease of doing business within the insurance industry, facilitating smoother operations and promoting overall sectoral growth. The RDI protection of policyholders' interest and allied matters of insurers regulation 2024 consolidates 8 regulations into a unified structure focusing on several key objectives aimed at ensuring fair treatment of prospects during solicitation and sale of insurance policies. The regulation seeks to protect the interest of policyholders throughout their engagement with insurers and distribution channels. It emphasizes the adoption of standard procedures and best practices by insurers and distribution channels to fulfill their obligations towards policyholders, including grievance redressal and policyholder-centric governance. So additionally, the regulations aim to promote prudent practices in risk management related to outsourcing activities by insurers. Furthermore, the regulations ensure that the opening or closing of the places of business by insurers, both domestically and internationally, is conducted in a manner that prioritizes the interest of policyholders. And the Bima Sugam will be an insurance electronic marketplace that aims to achieve universalization and democratization of insurance to empower and safeguard policyholders' interests so as to achieve the vision of insurance for all by 2047. So this marketplace would serve as a one-step solution for all insurance stakeholders, including customers, insurers, intermediaries, and agents, thereby promoting transparency, efficiency, and collaboration across the entire insurance value chain. On Bima Sugam will accelerate the retail platform, which was long overdue. This will help the customers with better choice, although customers would definitely need an advisor to select the right product, since products like health and life are a longer term product and needs to be selected carefully, looking into the future. So the registration and capital regulations at various places introduce the concept of competent authority to mean either the chairperson or a whole-time member committee of the IRDI. The share issuance at face value during registration process is also defined. Codification of withdrawal of registration applications has been cleared. So now with 2022 regulations marked an important milestone in IRDA's regulatory regime governing insurers. Registration and capital regulations have been developed basis industry representation and feedback submitted by RRC. But thereafter, the IRD has introduced 8 new regulations which will monitor, which will govern and regulate the insurance industry throughout the value chain. These new regulations are, after a long discussions with the stakeholders in the insurance industry, and they will now regulate the insurance industry with the amended provisions. So the insurance industry has been accepting all these new regulations because these regulations are introduced and issued by the IRDA. Thank you very much.